You ever look back and think, why didn't I buy Nvidia when it was under $150? You're not alone. Most people miss the wave, then chase the splash. But what if I told you, Wall Street's quietly circling a new batch of stocks right now, companies at the tipping point, before they break out. The Nasdaq's down over 13%, and this is when smart money moves in, because fortune favors the prepared. And in this video, we're revealing 5 growth stocks that could explode in 2025, including one that almost no one's talking about yet. Let's dive in. Here's the game plan. We're not here to hype penny stocks or recycle last year's buzzwords. We're digging into real fundamentals, fresh innovation, and market trends that haven't fully priced in. Each stock on this list sits at the intersection of AI, software, or data, and they're building moats. We're talking competitive advantages, massive addressable markets, and real customer traction. You'll get the story, the risk, the momentum, and most importantly, the open loops Wall Street hasn't closed yet. Let's start strong, with a stock you've heard of, but probably haven't fully appreciated. Stock number 1, Nvidia, ticker NVDA. Let's be honest, if you missed the first Nvidia run, it stings. But here's the thing, this story, it's not over. Nvidia still controls over 90% of the GPU market. Their CUDA platform, a software fortress that locks developers in. And in 2024 alone, they doubled revenue, twice. But now, they're taking things to another level. Their latest chip, Blackwell architecture, isn't just fast, it's a game changer, powering everything from research labs to gaming platforms to AI cloud infrastructure. And then there's Omniverse, a platform where entire factories and cities can be simulated in real time. It's already being used in automotive, manufacturing, and even robotics. It's no longer just about GPUs. It's about being the backbone of the AI world. Risks? Sure, Nvidia's stock trades at a premium. And if AI spending slows, short-term dips are possible. But long-term, they're building the picks and shovels in a modern-day gold rush. But before we proceed, here's a question. If you could only invest in one tech stock for the next 5 years, which one would it be? Comment your thoughts below. Stock number 2, Broadcom, ticker AVGO. If Nvidia's the king of general AI hardware, Broadcom's the silent architect behind the curtain. See, Broadcom is doubling down on custom AI chips, tailored for specific enterprise needs. Big tech wants control, custom silicon gives it to them. And Broadcom? They're the supplier. They've secured deals with Apple, and they're targeting a $90 billion addressable market by 2027. But they're not just semiconductors. Broadcom's diversified into software, acquiring VMware, expanding cloud infrastructure capabilities, and generating massive recurring revenue. They just launched PCIe Gen 6 tech, which improves data speeds and energy efficiency in next-gen servers. Their blend of hardware precision plus enterprise software makes them incredibly resilient. Risks? Reliance on a few major clients, which means one contract shift could sting. But if enterprise demand continues to scale, Broadcom could quietly dominate a critical corner of the AI supply chain. Stock number 3, Alphabet, GOOGL. You think you know Alphabet, but what's coming? Most people haven't seen it yet. Alphabet is in the midst of a massive transformation, driven by AI. Their new model, Gemini, isn't just a ChatGPT competitor. It's built into Google Search, reshaping the core of their empire. The result? Hyper-personalized results and next-gen ad targeting that could unlock billions in new revenue. And they're not stopping there. Google Cloud posted 30% revenue growth and a 142% surge in profits. They're becoming a major force in enterprise AI and data analytics. Meanwhile, Waymo, their self-driving division, continues testing in major metros, a few successful expansions, and we're talking decade-defining disruption. Yes, the ad business still faces regulatory pressure. Yes, AI could eat into traditional search. But Alphabet's reinventing itself faster than people realize. And when this pivot clicks, it'll be massive. Stock number 4, Salesforce, ticker CRM. Now this one's exciting. Salesforce is no longer just a CRM company. They're becoming a full-blown AI command center for enterprises. Their new platform, Agentforce, is making customer support and marketing smarter and nearly autonomous. And then there's Einstein Copilot. It's like a sidekick for your sales team. Real-time suggestions, pipeline insights, follow-up prompts, powered by generative AI. They've also integrated Slack and Tableau into their platform, meaning the whole workflow, communication, insights, automation is under one roof. Now, enterprise spending can be cyclical, and not every sector adopts new tech quickly, but Salesforce has shown it can adapt, and their AI-led push could lead to more stickiness, higher margins, and stronger retention. This one's a slow burn, but it's looking more and more like a long-term compounder. Stock number 5, GitLab, ticker GTLB. And finally, the underdog, GitLab. This company is building the DevSecOps platform of the future. Code, test, deploy, secure, all in one pipeline. What used to take multiple tools and teams, now it happens in a single interface, and developers love it. Their top-tier customers grew 29% last quarter, and their net dollar retention is at 123%, which means existing customers are spending more and sticking around. Their new AI assistant, GitLab Duo Pro, is already streamlining code reviews, catching bugs early, and saving developers hours. The market for DevOps platforms is getting crowded, sure, but GitLab's offering isn't just convenient. It's sticky, it's secure, and it's growing fast. If software really is eating the world, GitLab might be quietly feeding it. However, GitLab operates in a highly competitive space, and if enterprise budgets tighten, its rapid growth could be challenged. Still, with its innovative products and strong market adoption, GitLab remains one of the most exciting opportunities in the tech sector. As you can see from this table, each of these 5 companies stands out in different ways, reflecting their unique roles in the tech and AI landscape. Nvidia leads in market cap at $2.7 trillion, a testament to its dominance in AI chips and strong margins of nearly 75%. Despite its size, it doesn't pay a dividend, highlighting its focus on reinvesting for growth. Broadcom, with a market cap of $809 billion and a gross margin of about 60%, offers a modest 2% dividend yield, suggesting a balance between shareholder returns and funding new chip innovations. Meanwhile, Alphabet maintains a market cap of $2 trillion and boasts a massive $350 billion in revenue, pairing its 58% margin with a 0.5% dividend. This blend of steady ad revenue and AI-driven expansion underscores Alphabet's long-term resilience. On the enterprise software side, Salesforce brings in $38 billion in revenue and maintains healthy margins at around 70.67%, complemented by a small 0.4% dividend. This indicates a focus on sustainable growth while still rewarding shareholders. Finally, GitLab stands out for its impressive 88.79% gross margin, remarkably high in the development and cybersecurity space. Though it currently reports negative EPS as it invests aggressively in innovation and market expansion. Despite its relatively small $8 billion market cap, GitLab's lean business model and strong customer retention suggest it could be a sleeper hit for investors willing to tolerate short-term volatility. Overall, these metrics reflect how each stock is uniquely positioned, whether you're seeking high margins, dividend income, or pure growth potential. And before you go, what's your bold prediction for the stock market this year? Will AI stocks keep dominating, or is another sector about to shine? Comment your thoughts below, and if you want to get rich from AI stocks, click on this video here.